पंजाब सिंध गुजरात मराठा द्राविड उत्कल गंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे।
I am honored to extend a warm welcome, very concerned, and the vision of taking investor awareness to the last mile. IPFA is entrusted with the responsibility of administration, secured deposits, debentures, etc. to investors and to promote awareness among investors. Profit Economic Policy Research Institute. The promise of NCAER is to ask the share the results widely. IPF Research Chair Unit at NCAER aims to protect advisors how to protect oneself from fraudulent schemes and so on. National Stock Exchange of India Limited. It is a trusted market infrastructure institution with high standards of corporate governance, considered as a symbol of auspiciousness, prosperity and abundance. Before we embark on this insightful dignitaries to kindly light the lamp. Now my is the best thing you can do, and indeed today's workshop centers around empowering ourselves with knowledge in the world of finance. Without further ado, let us welcome Mr. Krishnan Iyer, Senior Vice President Business Development NSE India Limited, for the welcome address. Mr. Iyer, in his current role at NSE, is overseeing product relationships and business development. As a part of his responsibilities, he oversees investor awareness and education initiatives of the to open the session with the welcome address.
To welcome you all for this investor education and protection workshop. This is a collaborative initiative by the IPFA chair unit at NCAER in association with the National Stock Exchange in Hyderabad. At the heart of this initiative lies a shared vision to create a financially literate and empowered society that is well equipped to navigate the complexities of the financial markets. We are delighted to have esteemed guests, industry experts, educators, policymakers with us today, and most importantly, our enthusiastic participants. Your presence here today is a testament to the growing recognition of financial literacy as a crucial aspect in our life. India has solidified its position as the fourth largest economy in this world, with a market capitalization of around 4.82 trillion, and this is after US, China, and Japan. So India's equity market cap has grown nearly 1.7 times the size of the banking sector today, which underscores the significance of capital markets as a critical driver of economic activity in 2025, implying a growth of more than 3.5x in the last 5 years and nearly 7x in the last 10 years. So it took 14 years since the birth of NSE in 1994 to reach 1 crore investors, but the pace has steadily increased. More recently, we've been adding about 1 crore of investors every 5 months. That's the pace at which the investors are growing, and the participation in the capital markets is growing. So today, we cover 99.84% of the PIN codes in the country. So that means our investors are present in every nook and corner of the country. Now, when I talk about Telangana, we've got about 24.75 lakh investors, and I would say this is about 2.4% of the total market share. And it is very good to note that 25% of this population are female. So this is really heartening to know. Investor confidence is further evident in the substantial growth of SIP contribution, which has come up from 59,482 crores in 2017, and now it is 2,68,323 crores. This is in 2024, giving a robust growth of 24% CAGR. With these facts that I've given, with the numbers that I've spoken, it is of prime importance today that we educate our investors in the capital markets, and there has to be a greater impetus given to investor awareness and investor education and increase the amount of financial literacy. Investor education is not just about learning how to invest. It is about fostering a culture of financial awareness, responsibility, and security. So the financial landscape is evolving very rapidly today. We have digitization happening. Today, you can actually kind of do your investment activity on your palm through a mobile phone, mobile app. In this digital age, I would say financial literacy must go beyond saving and investing. It must also incorporate knowledge about cybersecurity, digital banking, and fraud prevention. The IEPFA chair unit at NCER, with their unwavering support of investor education and protection under the Ministry of Corporate Affairs, has been at the forefront of this mission. By conducting seminars, workshops, and webinars all across the country, we are reaching diverse segments of the society. These initiatives aim to equip individuals with the knowledge and confidence to make informed financial decisions and avoid fraudulent schemes. The theme of today's workshop is investor education, not a one-stop effort. Synergy and digitization is the need of the hour, which perfectly captures the essence of what we aim to achieve. Investor education is a continuous journey, and this requires collaborative efforts from regulators, financial institutions, educators, and community at large. Additionally, with the rise of digital finance, financial literacy must evolve to keep pace with technological advancements, and investors must be equipped with the knowledge about digital finance risks, fraud prevention measures, and regulatory frameworks to protect their interests. As we move today with the workshop, I encourage each one of you to actively participate, ask questions, and absorb as much knowledge as possible. This will be a powerful tool as it has the potential to transform lives and the communities in general. Let us work together to ensure financial education is not a privilege, it's a fundamental right of everybody. Once again, I extend my heartfelt gratitude to IEPFA and NCER and all the participants here for making this initiative possible. Let's today make this session insightful, impactful, and inspiring. I thank you and wish you all a productive and enriching learning experience today.
You can see this is a very important partnership event. Several stakeholders have come together for this very important event. I want to thank Mahapatra ji and Colonel Aditya Sinha ji, Krishna Iyer ji who are on the podium, and other dignitaries as well as the students of the podium. I am a different person here. I also invest, but not directly in money. I invest my time and energy in processes that generate money. And the primary force that generates money is education and technology. So I invest all my energy, experience in fortifying the field of education and technology. So there are three important pillars we are talking about: education, technology, and wealth. Wealth is the product of these two. And as Iyerji was mentioning, we are 5th and 4th largest economy now, moving towards that. And maybe in few years' time, we will be the 3rd largest economy. It's only the question of time. But our elephant in the room is not becoming the 3rd largest economy. We will. By the sheer mass of the size of the economy, we will be the 3rd largest in size. No question about it. But the real challenge begins then. How do we ensure that everybody in the country is wealthy and happy? Country would have become rich by 3rd largest economy, but people would not have become rich. This is the challenge. And therefore, to me, education in one track, wealth in the other track. When we expand, we are expanding education also in national education policy. We are ensuring that by a decade or so, we would achieve what is called 50% gross enrollment ratio. At least 50%. The youth in the country who are in that age group, at least 50% of that should go through high quality, high education. This is the goal. Just now I heard that our investment has reached that large number of our aspirational youth get educated, technological become savvy, and at the same time generate enough wealth and investment. So these are twin tracks that we need to ensure that we move fast enough and come up with solutions for efficient partitioning of wealth. If we generate enough wealth and do not partition the wealth well enough in the system, then we are not a successful nation. We must ensure that we evolve mechanisms whereby our wealth not only gets generated, multiplied, but partitioned. I want to emphasize on partitioning of wealth in the system so that all the citizenry of the country have enough wealth to lead a rich enough and happy enough life. For that, I think one of the toolkits is investment, proper investment, etc. Even in this large country, there is very little awareness of how to invest properly. We have done miserly little in this. I must say this. Even well-educated people do not know how to invest their wealth properly, even now. And there is the other dark side evolving where financial frauds can come and rob a citizen who has earned the money with hard efforts. So you see both sides of the world are going in certain direction, and therefore awareness, education and right processes must be put in place so that all the youth who are sitting here not only become financially very prudent, but also become financially intelligent enough so that they not only protect their wealth, multiply their wealth, but become resilient, refractory to external onslaughts. It's very, very important. Even now I hear stories where highly educated, technologically very savvy people get succumbed to financial frauds. This we should avoid at any cost. So we have a lot of responsibility in the system where we generate enough resilient awareness in the system to ensure that not only wealth gets generated but gets safeguarded and partitioned very well. You can see that you have a very interesting lineup of speakers today. My youngsters must ensure that they pay attention to all these details. And one word of caution from me is that they should always keep their antenna up and challenge every doctrine that is put forward. Never take anything for granted. Be an attentive, intelligent student all your life. It's very important because the world is changing very, very dynamically, very drastically in fact. You will be enamored as well as inundated by artificial intelligence before you know that you are captivated by that. So it is important, all of us, youngsters especially, must ensure that they are alert, number one, keep up their intelligence, number two, and ensure that their awareness levels stay high all the time. We are in a very deeply interconnected world in more than one ways. Any tinkering that happens anywhere in the world will affect all of us somewhat very deeply. So all of us stay educated, stay awake, and ensure that we not only work for ourselves but also for the system at large. In particular country, the Bharat, which is roaring to go, these 1 to 2 decades of Indian history to come is going to be a turning point for not only our future destiny, but also in some sense global destiny, because the race is heating up. When we hit number 3 in the size of economy, the real race begins, and we must be ready for it. Thank you very much.
Personal. Apart from this, recently completed his MBA in International Business from Indian Institute of Foreign Trade, New Delhi in November 2024. I would request you to kindly read the message that JS ma'am has.
2 months earlier, apart from my routine duties, I was also a student. I was also doing my weekend PGDM in international business. So I totally understand how interesting or how boring you must be feeling about it right now. So I will be concentrating especially on the budding scholars in the last rows, because that is where even I used to sit. Now coming over to the message from our CEO, Mrs. Anita Shah Akela. She's the CEO of IAPFA, and thoughts and best wishes are with you. I'm confident that the discussions and insights generated during this workshop will contribute substantially to IAPFA's ongoing endeavor to create a more informed, protected and empowered community of investors. Under the IPF chair, Professor Dr. Mahapatra of NCAER, the initiatives promoting investor education and awareness through workshops, conferences and seminars for for different target groups have indeed reached a new level of excellence, perfectly aligning with the goals of IPFA. I encourage each of you to actively participate, engage with IPFA initiatives and the ideas presented, and take this opportunity to enhance your understanding and advocacy of investors' right in education. You may also spread the word about IPFA so that rightful claimants can reach the authority for the claims that are due to them. Your involvement is pivotal in driving the process we aim to achieve in safeguarding the interests of the investors across the nation, because you, the youth, are the future of the society. Thank you for your commitment to the vital cause, and I wish you a very productive and enlightening workshop. Though absent in person, my best wishes accompany you. Warm regards. This is from my CEO, that is Mrs. Anita Shah Akela. Now, coming to certain points, I will just take 5 to 10 minutes depending on how interesting you find it. I'll just finish off whatever we have from my side. Honorable dignitaries, esteemed guests, budding industry leaders, participants, it is an honor to address you on the critical subject of investor education and protection. As India's financial markets, just brought out by the speakers before me, are growing rapidly with increasing retail investor participation. In fact, one of the professors was telling me, I think it's almost reached 80 lakhs or something per month, if I'm not wrong, in the conference hall.
80,000 per day.
I'm so sorry, 80,000 per day. I'm just quoting my one of the esteemed guests. 80,000 per day are adding up every day. These are the figures one of the senior functionaries from NSE has brought out. So, with retail investor participation, we must acknowledge that investor education is an ongoing process requiring continuous effort, innovation, and collective responsibility. While this growth brings new opportunities, it also presents challenges such as financial fraud and misinformation. On behalf of Srimati Anita Shah Akela here once again as my CEO and the Joint Secretary of MCA, I, Lieutenant Colonel Aditya Sinha, General Manager IPFA, am proud to share that we are leading this mission through technology-driven and grassroots initiatives aimed at fostering informed and responsible investing. Now, there are certain key considerations to think of as far as investor education is concerned. One which we have already discussed, that is market is evolving. It is ever evolving with new investment avenues coming up every day, the digital assets and complex products that are on offering, and which require us as investors to be informed. Millennials and Gen Z are entering market demanding digital and interactive learning experiences. The rise of social media calls for guidance to distinguish between genuine opportunities and frauds. Our approach, therefore, must leverage digitization, ensuring investor education remains accessible, engaging, and ongoing. Talking of the synergy, which is a multi-stakeholder approach, today's discussions certainly emphasizes the importance of synergetic efforts between the government, regulators, industry associations, and NGOs. Investor awareness requires collaboration among financial institutions, educational bodies, and industry players. Public-private partnerships are crucial to expanding outreach, particularly in rural areas. Integrating financial literacy into educational curriculum ensures that early awareness with corporate engagement in financial literacy through other efforts like ESG and CSR initiatives is certainly vital. At IPFA, we believe collaboration is the key, and our programs aim to unite stakeholders to drive investors' awareness at scale. We did bring out that digitization is the future of investor education. For investor education, it is the main prominent thing. And therefore, the digital revolution has actually reshaped investing, demanding an evolved approach to investors' education. AI-driven platforms offer personalized learning with big data aids regulators with the big data aiding the regulators in crafting targeted awareness campaigns. FinTech collaborations engage first-time investors, and multilingual content ensures inclusivity. Embracing this shift, IPFA adopts a digital-first strategy leveraging social media, mobile apps, and virtual platforms to empower investors nationwide. Now, just a few aspects as far as IEPFA is concerned, which may not be, which most of us may not be privy to here. IEPFA has launched several impactful programs to educate, protect, and empower investors, particularly in rural and semi-urban, that is tier 2, tier 3 cities. And a few of them I can highlight here are: one is Niveshak Didi, which is a women-centric financial literacy initiative. This initiative fosters peer learning and enabling women to educate others on investments, markets, and fraud preventions. Focused on rural areas, it strengthens financial decision-making and leverages women's network to create a lasting impact in investor education. The next one, which we have, is Niveshak Sunwai. Now, this is a weekly program which is conducted at IEPFA on Mondays. The investor protection, this program, which basically offers a platform for grievance redressal, that is Niveshak Sunwai, enables investors to address concerns of unclaimed shares, unpaid dividends, and frauds. These structured hearings ensure a fair resolution, prioritizing investor rights and fostering trust in the financial ecosystem. The next program we have is Gyan Darshan, which is an innovative initiative using short videos, webinars, and digital campaigns to educate investors on financial market risks and fraud prevention. Refund and resettlement of claims of unpaid and unclaimed shares and dividends is also one of our charters which we have been doing. Many investors are unaware of their unclaimed dividends, matured deposits, or shares which are lying dormant. The IEPFA now has streamlined the process of claiming these funds, ensuring rightful owners receive their dues through a transparent and efficient manner. We have certain IAPs, which is investment awareness programs, being held nationwide in collaboration with other stakeholders like SEBI, RBI, the stock exchanges, and various NGOs. IAPFA conducts investor education programs across this country with a focus on financial planning, responsible investing, and fraud prevention, thus reaching millions of investors each year. The second last or third last I can mention is Niveshak Sarthi, an initiative of IPFA which serves as a comprehensive investor awareness and assistance program designed to educate, empower, and support investors. It provides critical insight on financial literacy, fraud prevention, and claim settlement. Through digital outreach and interactive engagement, it ensures informative and secure investment decisions. A point about segmented booklets, which is a tailored approach to financial literacy. IEPFA's segmented booklets cater to diverse demographics, that is students, homemakers, retirees, and self-help groups, thus ensuring accessible, need-specific financial education. Launched on IEPFA's 8th Foundation Day, these resources empower individuals with targeted insights, reinforcing IEPFA's commitment to inclusive investor awareness and fraud prevention. The last one which I would like to mention is Fundonomics, Fundu, which is the mascot of IPFA. Fundonomics simplifies, is a IPFA's flagship initiative designed to make financial literacy engaging, accessible, and impactful. Through interactive content, gamification, and real-world insights, it empowers investors, especially the young and first-time participants, to make informed decisions, avoid financial frauds, and build a secure financial future. There are certainly certain key challenges which we envisage and we believe which we need to address in the way forward. One is strengthening efforts against misinformation and financial frauds. Next being bridging the rural-urban divide with localized literacy tools and regional content. And lastly, engaging long-term financial planning over short-term speculation for sustainable growth. To overcome these challenges, we need a sustained effort from all stakeholders. Ladies and gentlemen, investor education is a continuous journey evolving with the financial landscape. Policymakers must foster an ecosystem prioritizing protection and literacy while industry leaders leverage technology for accessibility. Investors must commit to lifelong learning and informed decision. IEPFA remains dedicated to empowering investors through education, technology, and grievance redressal. But collective collaboration, innovation, and commitment from all stakeholders are essential for a long-lasting impact. Finally, let us work together to ensure that every investor in India is informed, protected, and financially empowered. Thank you so much.
Dignitaries, Tirthankar sir, Satish sir, Debashish sir, Mamta ma'am, kindly join. The moderator of the session, Dr. C.S. Mahapatra is a former Indian Economic Service Officer of the 1986 batch and an expert in financial sector development and reforms, economic administration, planning and policy. Presently, he is the IEPF Chair Professor at the NCAER, where he heads the IEPF Chair Unit. Has served in the Ministry of Finance in senior positions from August 2007 till May 22, besides various other ministries and departments during his 36-year-long career in the Government of India. Prior to joining the government, he taught economics and was a banker. He held several wide-ranging responsibilities and undertook important assignments primarily in financial sector policy and reforms before retiring as principal advisor in the rank of secretary to the Government of India. As advisor and subsequently additional secretary in the Ministry of Finance, he was responsible for critical deliverables pertaining to financial stability and cybersecurity, financial sector reforms, policy and institution building. He was secretary to the FSDC, Asian Development Board, among others. He has also worked on capital market and related issues, including implementation of the SEBI Act and the Depositories Act. He has been chairman, member, convener of the various financial sector related to committees groups and served as chairperson of the Task Force on Sustainable Finance and Standing Committee of the Indian Promoting Foreign Investment in India, Task Force on Financial Data Management Center, convener of the Macro Financial Monitoring Group of the Ministry of Finance and a working group for setting up CERTFIN. He was also involved in setting up of the National Center for Financial Education and in initiatives for taking forward the National Strategy on Financial Education. In recognition of his exceptional contribution to investor awareness and education, Dr. C.S. Mahapatra was honored with the Investor Education and Awareness Award 2024 by SEBI and AMFI in November 2024. Sir, I would request you to kindly open the session.
गुड आफ्टरनून एवरीबॉडी। आपका तालियां का राज क्या है? चलो, so this ensures that everybody is awake. It's a good time. Either you are very hungry or you are completely full during lunch time. See, you know the topic of the discussion today. I equally very serious in terms of deciding a topic as I am in conducting a workshop or discussion of this level. What I thought is that everywhere you will see financial literacy, financial education, investor education, financial inclusion. The words are interchangeably used and many programs, certifications, awareness, many advices keeps on roaming around throughout the country. What is the right kind of advice and what type of work that we are doing, and it is leading the country to what level of financial education, how accurate it is, how updated it is, how sustainable it is, and how modern it is. This question was roaming in my mind for long. When I see people say that we have covered 10 lakh of people in giving financial awareness or financial education, that may mean many things. That may mean that they have motivated him to open a bank account, financially included, job is done. If you ask me, the answer is no, job is not done. If they have a camp approach and they train 300 people, 500 people in a village, and then after the one-day program, they come back and say that we have educated financially the rural area people and children, women and students, the job is not done. What is financial education? How it is different from financial inclusion and financial literacy? And what we do to make people financially literate, are we doing the right things? When we set up the Financial Stability Development Council, FSDC, which is the AFEC institution, which has all the regulators as members, and the chairman is the Honorable Finance Minister. It was set up in 2010, post the financial crisis. I have worked as the first secretary to the FSDC. One of the objectives which we decided should be financial inclusion and financial literacy. Inclusion is not literacy. Inclusion is just making you or including you. Like all of you have been brought to sit here, doesn't necessarily mean that you will be educated when you go back. Only when you listen carefully, you participate interactively, go back and study what is relevant and then apply it, then only you are financially educated. What is financial education again? It means not only the knowledge, it starts with that. You should have the skill of using your knowledge, and it doesn't stop there. You should have the right kind of attitude. You have the knowledge, have the skill, but you don't want to invest in the market or don't want to do many other investment products. It's not only capital market. You do not want to invest, or you do not have the aptitude or attitude to invest, means you are not financially literate. The fourth thing is that you should manifest it. You have attitude, you have the skill, you have the knowledge, but you do not show it in your behavior. You do not manifest it through your behavior. That is the last step. Only when you manifest it, then you are financially educated and effectively. And where should you lead to? It should lead to maximizing your financial well-being. Today, not only there is a huge gap in terms of financial literacy, as we all call it, only 27% of our population are financial literate. We want to run up to Viksit Bharat by 2047, and the challenges are much bigger than we think in terms of the financial sector. And even after we are financially literate, we need to be there only with modern knowledge. Now I come to the point of digitalization. When we digitalize the entire financial activity, how many of us have heard modern programs, certification programs and modern camps where you tell them what all is going to happen in future in this country? How many of you know what is CBDC? Anyone can stand up. I think you know a bit of finance or economics. What's the full form of CBDC? This is an initiative, but yeah, can you be louder, whoever is speaking? Do I take it that none of us know this? Yeah, please. Then, you get up. I think you have to get up. We have a mic. Please introduce us.
Good afternoon, sir. My name is Abhishek Kumar, and CBDC means Central Bank Digital Currency.
Okay. Well answered. Let's have a clap for him. This is the right time to clap. Others must have heard also. This is a RBI initiative. What will it do?
Sir, little bit I know about this, that our currency after demonetization, the new notes has been formed. It after few times, after some days, we will use a digital currency or digital notes in our banking system as well.
This is going to substitute your currency notes. Your 10 rupees, 20 rupees, 50 rupees, 100 rupees notes which you are carrying in your purse will be substituted by numbers, and it's a digital currency. You people know about cryptocurrency? Yes. See what a great yes. You don't know that there is no proper regulation for cryptocurrency in this country. Do you know this? Yes. Yet you know what is cryptocurrency, but you do not know what is CBDC. This is the government which is trying to use blockchain technology. Reserve Bank is just substituting your notes with currency. This is the first thing to know as a well-aware citizen of this country before you finally invest. And talking about cryptocurrency, I can go hours and hours. The regulation is not perfect so far, and the volatility is very high. You may be duped, but people invest thinking or listening to some type of financial advice which is not registered nor impartial. There are studies to show, now talking about you all students, more than 50% of the investment is done by students by simply looking at YouTube and unsolicited advices. More than 40% of people do not invest or spend with a thought in mind. They think of doing the BNPL, which we call is buy now and pay later. They do not understand that we have to have a proper planning, which is called financial security, and you need to know what is saving, what is investment. These are the basics all will know, but you don't know how to apply them, how much of money you should keep with you. And do you all believe in spending for pensions now at this age? Once you get into a job, the answer will be clearly no. This is not the time. हमको बुढ़ा हो जाने दो तब करेंगे. This is not the answer. You have to spend money for your future. You have to keep money for your future. Gone are those days, the benefit of which oldies only have the definite pension plan. Now it is a contributory pension plan. There are many mutual fund and many other agencies are giving out schemes to invest now, so that after you retire, one day you will retire, you will have lots of money to survive as well as invest. So young minds do not believe in pensions, nor do they believe in insurance. The appreciation of that is very important. Now talking to this about this subject, here we say that it's investor education, therefore is not a one-stop effort. एक बार किसी को बता दिया काम खत्म नहीं हुआ है. Every day there are new scams, new frauds. I keep talking to the RBI ombudsman and all the people. People in the RBI also, when they retire, some of them have been duped. Anybody can be duped. You know about the voice cloning, you know about the false SMSs coming, you know about unknown numbers being picked up by people. People sharing their Aadhaar number and their OTPs carelessly, and also their CVVs of the credit card, and then getting into problems. So negligence is one thing. The other thing which makes you vulnerable is your greed. People come and tell you that the rate of interest in this case will be much more than what you get in any market. Then you get duped into it. After that you are finding yourself in a situation where you have already lost your money. Today there is also information, news about lakhs and lakhs of people being digitally house arrested, which means you will get a video call, it will be a threatening call, request call, ordering call or whatever, some sense of emergency, some set of threat, some state of greed will be inculcated into your mind. Before you think, you act what they say and you lose your money. But now, do you know what are the schemes and programs that is there to report or inform or save yourself from that? All of you use credit cards. Are you aware how to use the credit card safely? Please go back and see. Every day newer and newer methods are being applied, newer and newer schemes and programs are being implemented by government, by the regulators to save the common man from them. Unless we know that, how do we protect ourselves? Unless we know that what are the cyber security threats, how much more people have been impacted, how are you going to protect yourself? So training people once is not the idea. The other word which I use here is the synergy. You have to have a synergetic effort. I have been interacting with all the regulators, government, industry associations and capital market associations where I find everybody is doing this thing called financial awareness. But are they all putting their mind together in terms of modernizing the curriculum, in terms of telling exactly what an investor needs? Because people trust and confidence. People's trust and confidence is the first thing that you need to win for the financial sector. The moment you talk about finance, in the VC, when I was having a chat with him, he says, "Aapka to bada complex subject hai." I say, it's not complex. Not even at all complex as compared to the science and the inventions and discoveries that scientists are doing. Scientific inventions are happening. It's pretty simple. The only thing is that you are very reluctant to do. Now there is a lot of gender gap in this financial literacy field also. If men are 27% literate, women are 20%. And it will be startling for all the ladies here in the room that 49% or I think 59% of the urban independent women who earn money do not decide their expenditure independently, do not handle their finance themselves. They wait for their father, son, relation, brother or somebody, some male to handle it. This is the reluctance towards handling your own money. You work so hard, you compromise on your work-life balance and then whatever you earn, you do not want to manage your own money. At this level of education awareness, it is absolutely threatening, absolutely worrisome that we do not do a continuous digitalization of financial education process and also update those. I would like everybody to have a mobile and there you should know about what type of scam has started today, what type of scams are happening in rest of the world so that it can come here tomorrow. Before that you are aware of it. All these things are very, very important for you. I just wanted to convey the importance. I have gathered a lot of speakers with a lot of knowledge, but there is less time. We'll try to limit ourselves as much as possible. Thank you very much.
Thank you, Deepanita. Thank you, Dr. Mahapatra, for the opportunity. A lot has been spoken here about financial literacy. I'm an economist. As Deepanita identified me, I work with the NSE and I'm here to tell you some numbers. Actually, some of the numbers were told by my colleague here, Mr. Iyer, but it makes sense to repeat them as well. So we are in the world's largest country by population. We have 145 crore people. Out of 145 crore people, about 64 crore people are within 15 years of age and 65 years of age. So most of us are in that age group. So this makes the working population in India one of the largest in the world. Okay. How many people are investors in India? The number of investors was about 2.9 crores. 2.9 crores back in 2019. Okay. And it then started increasing faster. As Colonel Sinha pointed out, right now we are touching numbers which are close to 80,000 per day. And so the number of investors today is about 11 crores. We have, in Indian families, roughly 4 people, mummy, daddy, children 1, and a child 1, child 2, 4. So 140 crore people have around 35 crore families, students. And out of those 35 crore families, 1 in 5 families today, 1 in 5 families today have some connection with the markets. This is to tell you how important and how all pervasive is the need for financial education. 1 in 5 families. And this number back in 2014, 10 years back, was 1 in 14. So from 7% of India's population, the number has now gone to about 22-24% of India's population. That's the kind of numbers we have amongst investors today. If I ask you how many farmers are there in this country, you will have a difficult answer. I don't think anybody will be able to answer without checking the phone. It will be difficult. But the number of investors is really rising. This country, our country, has about 10 lakh schools, the highest number of schools in the world. Okay. Institutions like this, there are colleges, about 45,000 of them. This country has about 1,200 universities. So we have lots and lots to learn. And yet, the need for financial education is immense, just immense. And financial education is not something you can simply say, I don't want to learn. You deal with money every day. Most of you who are PGDM students here, your one job, one point will be to get a job, will be to do something. Am I right? That's a good idea. And with that job is the salary. Imagine somebody giving you a job and saying, please work for us for free, for goodwill. Will that be a good idea? And with money, the idea is to spend. Imagine somebody telling you, yeah, we'll give you a great salary, but we'll keep it for you for 10 years. Will that be a good job? So the idea of earning, the idea of spending starts with you from day one. Actually, for most of you before day one, because we are spending Papa's money or Mommy's money. So financial education is not something one can forget about at any point in time. All of us have to make mistakes. All of us will make mistakes. But the idea is to reduce those mistakes a little bit. And especially with markets, given the way markets are today, what do I mean by that? I'm not talking about the level of the markets. I'm talking about the smart people who are there in the markets. Everybody loves money. Is that a fair point? See, I learned in economics that money has a first derivative positive, which means that more money is always good money. There's also one other thing. It's called diminishing marginal utility. It means more money is not the same as after some point. I don't know if that is true. I don't know if that is true. I think that was written by somebody who was very rich. Maybe somebody can say that. Most of us will be very happy with more money and increasing rate of more money. But the idea is, with more money, there's a proverb in English: a fool and his money are easily parted. And that's why the need for education is important. The smartest of you here are meeting the smartest of other people in Hyderabad, who will be meeting the smartest of people in India. And then that's where the markets start. And if you want to get into that space, you have to study hard. You have to learn. As Dr. Mahapatra pointed out, the need for financial education is for everybody. But for this cohort, this set of people, remember I do research at NSE. It's important that you are very conversant, absolutely conversant. It was absolutely nice to see, actually not so nice, to see people knowing about cryptocurrency and not knowing about our very own CBDC. But if you go and think, how does a cryptocurrency work? That will take time. How does a DL work? A distributed ledger. How does it work? What can you do with the DL? That's the idea, and that's what is the difficult part. So at NSE, we have 11 crore investors. On any given day, about 35 lakh investors take part in the market. The number of trades that we do every day goes to about 30 crores per day. 22,500 seconds in the trading day, from 9:15 to 3:30. 30 crore orders, 30 crore trades. The number of orders sometimes goes to 2,000 crores. That's about 13,000 orders every second. So these are numbers, it will be very difficult to understand, right? But that's something we deal with on a daily basis. So if you want to play with us, study with us. That's the idea. So financial education at every point is very important. These are my opening comments. Thank you.
Of IRDAI, she headed the Finance and Investment Department and the Compliance and Enforcement Department in the authority, and has been associated with IRDAI since 2000.
Good evening, everyone. Dr. Mahapatra and the other speakers have all spoken about quite a few things that I thought I would cover. But any so which way, as part of the context, we'll see what to cover really. But two things that I wanted to share with you. One was relating to the IPOs. I think you're all aware about IPOs. Yeah. And this was something we were discussing just before joining in for the session today. And one of the speakers was mentioning that, whenever an IPO comes in, almost everybody who's got an interest in the security market puts in their money in the IPO, not looking at the document at all. That is the prospectus document at all, and just investing, and then within a few days getting out of the script, selling, and then making profit, or holding on to that script because they've not studied the value of the script, and then things don't go well for that company, and subsequently the price of the share falls. One example that I immediately recollect is that of Paytm. I don't know how many of you invested. I think it was probably a listing price of, or an issue price of about 1800. Just go and check what is the value today. And then, I was recollecting that my own PhD was done around the IPOs by the various corporates way back, maybe about 20-25 years ago. And the customer behavior or the retail investor behavior has not changed at all. Even then, that is how it was happening. Even today, it's happening like the same. And despite regulators coming out with, advices, nobody listens. They believe that, they're making the right decisions. They want to make a fast buck and get out of the markets. The other thing is, have you heard about penny stocks? Yes. So that's another one. Just go back and have a look at the prices today. You'll find that stocks, companies which have been running into losses for years together. Today they are doing so well on the stock market. They have witnessed 100 times, 1,000 times, or even more times jump in the market price. If you still go back to the market price, the EPS and the book value of that particular share, you'll find it still as bad as it was maybe a year back. But people are investing only because it is improving on the stock markets without doing any intrinsic value on the same. And the funny thing is, even the best of investment advisors are recommending those stocks and saying, invest in this is a good stock. But if you really look at those stocks, you realize that the value of those stocks, the intrinsic value is less than zero. It's actually a negative value. But it's something like a herd race, and this has been happening in the markets for maybe, about a year at least. I think NSE is here. They will bear to what I am saying. They would agree to what I am saying. And in fact, the regulators have come forward and said, that do not invest like this. Look at the value. If you can understand the value, only then go and invest. A person like me, who has so much of qualification in financial markets and all, I knew that I could not, donate or devote time to analysis of the markets and the analysis of the shares, and I stepped back because I did not have time. I did not want to invest without doing an analysis. So just a thought that I thought I will leave with you to appreciate when you enter the market, you do it only after doing a thorough analysis of what you are getting into. Don't go by the herd mentality. Okay, I am representing the insurance sector here in this platform today. So I thought I'll just talk about some numbers around insurance companies as well. Of course, there are problems in insurance sector as well. We'll talk about that as well. There are about 73 insurance companies which offer life insurance, health insurance, and general insurance. That is, various kind of products to cover the various assets we have, and we want to ensure coverage for the same. Have you heard about insurance companies? Yes. Do you have coverage around that? No. Okay, so I'll talk about the kind of coverage that we need when we are talking about insurance companies as well. We also have insurance agents who sell the products of insurance companies, brokers who sell insurance products, and also corporate agents who sell insurance products. In terms of value, any idea the number of policies that were sold last year in the insurance sector? 36 crore policies were sold last year in the insurance sector, garnering 11 lakh crore of rupees. And any idea about the kind of claims that have been paid by insurance companies in 1 year? No. So that's roughly about 7.5 lakh crores of claims have been paid by insurance companies. What would these claims be around? If life insurance is covered, then in case of death of a person, a coverage is provided. In case it's a money back policy or an annuity, there will be a claim provided on the basis of the terms of the policy that is taken. A health insurance policy, in case of an incident happening, a health issue arising, the claim is paid for that. Motor accident, a claim is paid for that. Third party insurance, the only insurance liability that is compulsory, but motor insurance in other area that is provided for. One area where almost none of us, believe in taking cover is home insurance. How many of you think that you have a home insurance policy for your home? I am sure none of you have it. And it is, the cost of that insurance is less than one lunch or dinner at a restaurant that you may be spending in. Just imagine, such a small price to pay for home insurance cover, but most people don't have it. I would again recollect an incident. I had a young colleague in the IBPI, that's the Insolvency and Bankruptcy Board of India. One of those days he calls me up and all worried and he didn't know what to say also. And what had happened, he had just got married, they had moved into a house which they had bought through a loan, and both the husband and wife were working. Coming out for work, the wife had this agarbatti she left on, when moving out of the house. And then somebody during the day calls up and says that, your home is all on fire. They lost everything. Every penny they lost that had been invested in that particular house. But thankfully they had the signs to ensure that, their home was covered. So that is the magic of, property insurance. Please go back home and tell your parents that they must buy home insurance for themselves. That's an important aspect to remember. Frequently, when I am at a public gathering or in an official gathering where, I mentioned that I was, working in the insurance sector, or when I was working in the insurance sector, then people came to know that, I am from the insurance sector. The first thing that will come is a grievance, my grievance relating to an insurance company. And yet, what is the percentage of grievances that policy holders have vis-a-vis the insurance companies? It is less than six complaints vis-a-vis 1 lakh of insurance policies that are taken. So that is the level to which insurance claims are paid and the level to which seriousness is given to addressing the grievances of the policy holders. Now, in terms of what the IRD has been doing to promote insurance. Hello. What IRD is doing in terms of promoting insurance. There is something called as the Trinity. That is, one is the Bima Sugam that the authority is working on, which is a platform that is being created to ensure that all the insurance companies come together and promote their products on that platform. That is one thing that is being done. There is something called as Bima Vahak. Bima Vahak is where, I think one of the speakers spoke about the fact that, a lady when she's earning, she still doesn't have the right to take decisions on the money that she earns. But there is another side to the story as well, where a woman insurance agent is selling products. The quality of that insurance is actually better than the quality of insurance that is procured by the male agents. And in fact, having realized that more and more insurance companies want to hire ladies as insurance agents, And then IRDA realizing that the rural sector can be tapped for the purpose of these Bima Vahaks, and therefore the intent is to have these ladies who are working in Anganwadi workers or something similar to that to come and sell insurance companies to the rural areas to see that everybody in those areas, those pockets, the last mile also get covered on account of these Bima Vahaks. The third thing is something called as Bima Vistar. What is the authority is also doing is, since all of these people who are in the backward areas or who are the last mile citizens of the country do not understand the kind of insurance to buy. So what is intended to be done is to have a packaged product whereby life insurance, health insurance, personal accident, property, everything is taken care of to ensure that a small package will ensure coverage of all their aspects. So, given the fact that I actually had quite a few things to talk about, but in terms of grievances, the authority has a mechanism to see through a Bima Bharosa platform, which says that, you know, if you have a complaint, go to the platform and make your complaint. Then things like insurance ombudsman is there to see that the complaint, if the insurance company is not taking care of the complaint, you can go and escalate that complaint up and see that the ombudsman awards the policy holders for a claim that may be, if it is a correct claim. So the authority is doing a number of things which are interesting, but as I'm leaving the podium, I would again tell you that please go for insurance. It is in your interest. Go for home insurance, go for health insurance, motor insurance is important, and as Mr. Mahapatra said, life insurance or term insurance is important so that, you know, the safety of the family is there in case, you know, there is an untimely death, and annuity cover to ensure that our old age is protected, and when we stop working, there is another income coming in as well for us. Thank you. Thank you.
From which place? Raitu, which place it might be? Vegetable market, but can you guess, you know, by any chance, if you come from, when you come from Siddipet, on my way return from Siddipet, I encountered this vegetable market and I didn't find any single QR code there. You're all making payments through UPI, right? So this is a women-only vegetable market where it is only cash. And I often visit this, even though it is 60 to 70 kilometers from my place. And the last I visited, I found one QR code hidden behind. Nobody wants to accept payments through UPI. They only want cash. And just see the opposite. 20 kilometers beyond Siddipet, I see an all-in-one digital outlet where everything happens. You want everything, people in villages, they want to do any transaction, they will do digital. So we all know that we are part of this digital revolution where, you know, all these nomenclature words are familiar to most of us. I mean, I'm sure to the youngsters. And barring few, maybe some of them, some of you may not have heard of something called InsurTech, which is, ma'am just talked about insurance, and you will find that InsurTechs are combining technology and taking insurance to people and also to the underserved. So this is the landscape that in which we are actually living in, which is the digital payment revolution, I call, and this is the theme of the report on currency and finance of the Reserve Bank of India 2023-24. This is the macro picture. All that we are doing, having bank accounts, taking loan from both demand and supply side, all that we do in terms of getting included in the financial services, that is represented by this rise in financial inclusion index. And on the right side, you see the digital payments index. I'm sure all of you are doing UPI. So all kinds of digital payments are captured through, and you see that from March 18 to March 24, we have a sharp increase in the digital payments there. And this is how the landscape has actually evolved. Starting from 1990s electronic clearing services, we have reached the unified payments interface of 2016, which took off after demonetization, as you know. And you were also asked about the last one, which is the central bank digital currency, which is just the digital equivalent of your currency notes that all of you carry in your wallets or purses. Okay, and you can just transact to that. And if you have an UPI app, you are, which is being piloted and lakhs of consumers are now included, both merchants and people like you and me, you can use the digital currency to transact. And I'm just telling you that before UPI, I just wanted to highlight a case that since in this seminar we're talking about synergy, about all the regulators, SEBI, NSE, RBI, all those who are dealing with regulations in financial services, how do they come together and how do they protect the consumer's interest, the investor's interest, and all our interests. This is a quick case. This is a village from Banaras that we studied in 2015. And these are all poor people availing loan from microfinance institutions. They also have an insurance. They take 10,000 rupees of loan, and if somebody dies, they have an insurance, and the insurance will be settled. And how the world was different before UPI. This is the time when the MFI collects the documents from clients if the death happens and submits to the insurance company, and the claim gets adjudicated by the insurance company, and payment is processed by cash or check. The problem is most of these people don't have even bank accounts. So how do you give them their claim? How do you settle their claim when they don't have bank account? And this was the kind of difficulty that at that stage it was people are facing. And the problem was RBI mandates cash payment only up to 10,000. So the insurance company cannot give 10,000 beyond 10,000 rupees of claim cannot be settled, because that is cash payment can be done only up to 10,000 rupees. And you see how crisis leads to innovation. And this is where these three players come into picture. One is a microfinance company, one is Bajaj Allianz, the insurer, and then you have somebody who is providing the card in stage 2. One possibility is to electronic transfer that I was talking about, but you can't do it if you have your bank account is not operational, the know your customer is not done. And then finally, the idea is to come up with an open loop prepaid card just like your ATM card, and use the card and load the claim amount to the card so that the person goes and withdraws the money from the ATM. And you will be surprised that the day the card was launched as part of the research project, I was present there, and most of them didn't even know how they are seeing the ATM card for the first time and how to really insert the card in the machine and get the money out. Then there are issues of denominations of currency. If I have 5,500 rupees and certain denomination notes are not available in the ATM machine, you can't really withdraw. So this is, and that is the time when these three players come together and try to solve a problem. And fast forward to 2016, demonetization, then the United Payments Interface devolution. Now all of you are making payment through UPI. But even after UPI, we have moved from a tangible mode of payment, which is a card, to an intangible. Because when you deal with cards, sometimes in rural areas people say that mobile mein paisa kaise ho raha hai, because mobile is intangible. But now people are used to it because they are using UPI. And even after that, when we went to the field to again study the digital payment landscape, and something interesting comes out. And this was done in the context that when central banks are launching central bank digital currency all over the world, and we have also started our pilot, both for the retail and for the wholesale, we wanted to know what are the pain points. How do people feel about UPI or cash? Why are they so rigid about digital payments or otherwise? Why are they rigid about cash? So when we talk about that, and when we did qualitative research, there is no quantitative research here. It is all about talking to people and trying to know what is there in the mind. And you see some interesting things come up in this word cloud. You find trust somewhere. All the bigger letters are the themes which people emphasize. You have verification, you have trust, you have online, you have network, you have cash, you have change. So some of them are benefits, some of them are actually difficulties. Because someone who is asking UPI, accepting UPI, he doesn't want to deal with cash. Because the change concept we say, people say here tens, for example, in the local language, that I don't have tens instead of change. Okay? So that they take it as an ease factor, and for which they want to switch over to UPI. But at the same time, you have people who don't want to deal only with cash. And these are the things. Every auto driver that you go will have Okka Bharat, Okate QR, isn't it? So that is the ease factor of convenience for which they want to do UPI. People do 1 rupee test, they do the verification. Someone doesn't read, but just sees the green tick and accepts the money and believes in you that you have made the payment. Sometimes even the money may not have reached the account. People do dual kind of recording. They look at the screen at the same time they write in the manual in a ledger to reconcile the amounts which came in the mobile mode of payment at the end of the day that they have got their money, into the account. So that is the kind of verification that they do. And in other things that we found, what people are worried about. They're worried about the transaction failures. They're worried about the risk perception. I mean, they find certain things to be risky. Money not reaching their account, or someone when the transfer is made, they are not very sure whether the transaction is complete, which we call finality. And then the role of fraud, scams, and dispute resolution has become very important in building trust. We very casually use the word trust, but trust is very complex. Trust has three things: in whom we trust, in what we trust, but the important factor is in how we trust. Our trust develops only with time and patience. I may fall down twice, but third time when I stand, my trust develops and I start using that. And that comes from all the examples that were given by co-panelists on the educational initiatives and all that. Apart from that, it comes more from the community, the peer-to-peer communication and in-person communication. When I tell my friend that, look, this is safe, you can use, then he starts using it. So it needs to be complemented with the face-to-face kind of peer-to-peer learning that happens in digital payments. And these are the senior citizens who are asking that when a fraud happens, they're asking that will the state stand up? By state I mean the government or the RBI or the agencies who are responsible to keep or safeguard your money as the custodians. So these are the fraud cases that you find in the banks. In the annual report of the RBI, it gives us the breakup of the frauds here. So this gives a macro idea of what kind of frauds are happening today. And look at a case. This is done by a 12th class student, and which is a live case that he finds that a school van driver opens his bank app. The app asks for an update, and the link, a PDF link opens up the moment he tries to update his app, and accidentally he clicks that PDF, and then he loses a particular amount, which is worth lakh. And within 72 hours, as advised by somebody, he connects with the toll-free number and complains to the police, does everything that he is advised to do. But at the end of the day, the resolution still remains a question. So the way forward is we need to keep customer centricity in mind in digital financial services. And the World Bank gives us 6 core outcomes from customer perspective. Similarly, if you look at the OECD, they also give us principles on financial consumer protection for government, oversight body, which are the authorities, and also the financial service. And around 130 customer-centric service are done by the RBI as of 2023. And these are some of the guidelines. The point I'm trying to make is that each one of us can relate to one of these guidelines and try to think about how can we enhance the financial education and financial literacy levels so that frauds will not stop, innovation in the financial markets will not stop. The only way we can prevent this is by educating people more and more. Like Dr. Mahapatra mentioned that we need to have frequency of awareness and literacy programs and tailor-made things. I mean, some of you might have seen this Raju and the 40 Thieves, which is a popular document by the Reserve Bank of India to educate people. And let's keep people at the center of all innovations. Let's not assume that someone will accept this technology. Let's keep people at the center before inventing the technology, even after coming up with some new technology. And I was just thinking that why can't we have community radio for the underserved? Those who are having feature phones, they can always listen to some radios in FM, and they can also listen to some stories or short audio component in the local language, and they will also get aware of how to save themselves from possible frauds, customized, tailor-made and thematic short films, and strengthening all the existing literacy programs that was discussed in this panel, and also strengthening the environment and infrastructure. By infrastructure, I mean connectivity, internet connectivity. If I go down to the basement in my apartment, I don't get connection, I can't make a payment to the society, for example. So I'm talking about the hard infrastructure there, that how can we do that, and everything is revolving around security, and finally it will be...
Those who are not attending should learn from this. Thanks.
Next we have Dr. Satish Kumar. Dr. Kumar is a professor of finance at IBS.
We have shifted to good evening, and I must thank you for the kind of patience that you have shown to us. Being the last speaker of the day, it's a little awkward situation for me because I can mentally see a few of you calculating the time so that you can go out and grab a cup of tea or head home. So being the last speaker of the day is a bit like being the last dish in the buffet, where you feel that people are still interested, but deep down you know that they're already full. But I would like to be the last dish of the day in terms of a dessert, where everybody is waiting. So where I promise not only to test your patience, but at the same time I'll try to make it as insightful, so that the next 5-10 minutes are worth your while. So the topic on which I'll be making a presentation, rather a very short talk, I'll not take much of your time, is about pension. Let me start asking you a question, all of you, which I usually ask to my students in the class. Do you invest? How many of you have a demat account? How do you invest? Are you investing on some hot tips, or are you investing on some research, or taking some sensationalized research topics? You do fundamental analysis? Yes. Are you sure? Yes. How many of you buy and sell an IPO? How many of you bought an IPO? Why did you buy an IPO? I think majority of the people who buy shares in IPO, I had a word with one of my panelists today, 50% of the investors sell away within 1 week, which means majority of them buy an IPO not because they have done the fundamental analysis, because they want to have listing gains. Now, you might be asking, you're talking about pension, why are you talking about investing? Imagine the kind of age that you guys are in. You are planning about your future. You have a lot of ambitions. By the time you turn 60 or 70, you want to have a lot of corpus, and you have your dreams, your adventure holidays, your different types of buying the assets, houses and cars. Everything is gone in a fraction of a second. Are you getting what am I trying to say? If you are not digitally literate, if you are not financially educated, whatever money you have accumulated over a period of time is just one cyber or fraud call away. You'll not believe, despite teaching finance for a long point of time, last week I had a call from my insurance provider. They said, sir, in your account somebody bought the insurance policy 9 years ago. I said yes. Is it agent driven? I said yes. Now sir, the agent is drawing a commission every year from your account, which has accumulated to some 2 lakh plus rupees. If you say yes, we'll transfer the amount. If you don't say, we'll keep it on hold and give it back to you. And I got surprised. I thought, this is my money. How could the agent take away all the money? The value of my policy will come down. That money should come to me. Then I asked her, what do you think I should be doing to get that money back to myself? She told me, please take this complaint number. She told me some digits, some numerical, some alphanumeric number. Then she gave me a mobile number, and then she told me the name of the guy to contact, and immediately I was kind of excited, I'm going to get 2 lakh rupees. And then for 5 minutes I took a pause, only to find out she called me from a mobile number. She's giving me another mobile number, and the complaint number looks like fake. So I think, I'm not sure, despite teaching finance for a long time, I'm decently financially educated, I had almost fallen for it. Now think about those who are out there, who do not have access to any digital platform, who are not aware of financial education. There is a greater chance of them falling prey to these scams. Eventually, I called up my insurance policy, had a word with them, spoke with them for around 30 minutes, and they told me it was all fake. Please stay where you are. So, I am talking about those who belong to everybody. Our parents, our grandparents who have either retired or who are about to retire, they are the main target of these cyber criminals. Can you tell me why? Compared to you and me, why are they the prime targets? They retire because the moment I get to know somebody has retired, I am a cyber criminal who is a cat, and I see a lot of milk about to snatch. They have a lot of corpus fund available in their account. Second, they are not as tech savvy as you and me. Third, because they stop working, unlike you and me, they spend a lot of their time on social media. And in that process, they end up putting a lot of personal information on social media. My daughter getting married, I'll put on the Facebook. My son getting married on Facebook. I'm buying a house on Facebook. I retired on Facebook. Eventually, I'm inviting a cat to capture my milk. So rather than doing these activities, how can we stop this? So I just had a glance at the statistics. These people who retire and who are taking pensions, there are more than 7.7 crore pensioners in India as on date, including both National Pension Scheme and Atal Pension Yojana. And I'm talking about more than 12.8 trillion rupees assets under management, which is a milk being targeted by these scamsters, online frauds, looking like a cat. Now, eventually, how can we address or solve these issues? As is the title of the talk today, investor education is not a one-stop effort. We cannot simply tell them do this and don't do that. It is an ongoing journey. Investor education is like learning how to drive. You do not just read a rule book and hit the road at high speed. You keep on practicing, you keep on engaging, you keep on following the new rules only to find out that you don't meet an accident. It's an ongoing journey. In the similar process, when I invest my money, I do not learn how to invest only once. New asset class emerge, new scams come. And I'll tell you, as a matter of fact, a CISF personnel, he was duped of his around 60 lakh rupees by scamsters. Imagine these people are not even scared of a police officer or a CISF official. Reason being, they do not have to confront you physically. You cannot trace them. What about you and me? So what is it one thing that these pension people are falling prey to? They get scared more easily than you and me. The moment you tell them, I have your Aadhaar card, I have your debit card, I have your credit card, I don't know where they grab that information from, and then they tell you, your Aadhaar card have been involved in so-and-so illegal activity or money laundering or other related issues, and I'll start panicking. And in that process, I may not answer the call anymore, but they'll keep on calling it time and again. And many of you might have heard, there's a process called digital arrest. And every other day I get a message from RBI or SEBI or NSE, there is no such thing called legal arrest or digital arrest. Please do not answer these calls. Now, what will happen? They'll start taking advantage of your panic, and in that process they'll ask you, will relieve you of this case if you start depositing this much amount to our accounts, and finally you'll be free. As a matter of fact, one retired consultant in Hyderabad, he lost more than 2 crore rupees because they found out his Aadhaar card details only to tell him that your account is related to several money laundering scams. And I start getting panicked. I don't even speak to my relatives because I don't know how will they react. I'm in a sense of fear, and I just want to get rid of the situation simply by paying something. So how do you think pensioners, they have their hard-earned money and they can end up losing that money in just single click? Another incident I would like to share, in Himachal Pradesh there was a case where it was found more than 50% of the scams are being exposed to those who are either retired or people of middle age, who fall prey to such scams more easily. So, what is it that we can do? The government, the NSC, the SEBI and IEPFA, they are doing a lot of seminars in which they educate investors, they kind of digitally make them literate, but eventually we kind of get away and do not pay much attention simply because it's not my cup of tea. I'm not earning, I'm not losing any money, why should I care? But eventually you have to understand, if we educate you, you educate 1,000 other people. You tell your parents not to do this, not to do that, do not put every sensitive information on social media. So for example, nowadays digitalization has become a great, it's a double-edged sword. We are celebrating the success of Digital India, at the same time we are inviting a lot of scams online. Eventually what happens, one of the main threats which these pension people are facing nowadays, you might be hearing, every year either physically or virtually they have to get their life certificates updated. And eventually most of the time these scamsters, they'll impersonate either as police officials or as income tax government officials, or some bank representative which will come to your home and tell you are updating your account details, you are updating your life certificates, and in that process, these pensioners end up sharing a lot of their sensitive information, including OTP, and eventually what happens, their account balance becomes zero. So what should you do in that process? It looks like a typical lecture today, but the moment it happens to you or somebody known to you, you'll start shivering, you'll start getting panicked. Entire money that you earned in your lifetime is gone in a simple click. So what is it that we can do? You, as a pensioner in India, PFRDA has been coming with a lot of guidelines wherein they explain to people what to do to avoid such scams in the future. At the same time, how to avoid these scams in the first place itself. So digitalization here can help you. I don't know how many of you are aware of a particular app launched by SEBI, Sarthi app. Have you heard of it? All of you, apart from your Instagram or Facebook or other YouTube Shorts video, should have this app in your mobile phone. It tells you question and answers, quizzes and investor information about market scams, how not to get duped, how not to fall prey to such scams, how to be actively involved in the market, how to be regulated, how to be financially educated. And for example, there's a lot of money which remains unsettled in the accounts of either pension funds or with RBI, for example, you have a website called Udgam. Such website has the data of all the unclaimed deposits, where you can simply log and find out how much claim is left to be claimed by you. If such initiatives could be given by PFRDA, wherein all pensioners, without having physically visit the office, they could simply log in and find out how much is their pension in real time, their families, their relatives, and entirely everybody in together can find out how much of the claims are settled and how much pension they have accumulated over a period of time. So just to conclude, and when I say I conclude, I could see a sigh of relief on many of your faces. Investor education or investor protection that we are doing here today, it's not about making somebody rich overnight. It's about making them financially resilient for life. So my final thoughts are, the Digital India campaign started by the Government of India is a great initiative. I'd like to change it, Digitally Literate India. Thank you.
It is being said that excessive financialization hurt the economy. It is a really worrying, it's a concern for me as a retail investor, for me, as a citizen of India also. So what are your thoughts on this? Is it really so happening?
What is your...
Which might hurt in the economy, and it has been already witnessed in the developed economies. And it is our developing economy.
See, you have to, when the financial market is thin and liable to be going for front running, circular trading and all the mischievous acts that also is being regulated by SEBI and NSE, it is in that context that they say that money needs to be distributed across sectors, banking, insurance, pension and capital market. So today the hype for investing, like people do not understand that cryptocurrency is unregulated, but they invest a lot. And the people who invest think that they will have profits and profits alone. People are not ready to understand that it can go down under also. So the right amount of financial education will strike that balance. And it is of course true that the purpose of every sector is different. Banking, insurance and pensions are equally important. That is what the message conveys, and that is the context in which it is said is making me even more worried in terms of making people really aware about the implications of this digitalization. More than the benefits of digitalization, I am concerned about the challenges of digitalization. In earlier times, if a fraudster or a scamster could affect only 10 or 20 people, today, in one stroke of his SMS or some phishing mails, can affect lakhs of people, of which thousands will be affected. So the scams and frauds, as some of you would have quoted, I remember 36,000 such fraud cases have happened as per RBI, only in the banking sector. There are other sectors also, involving around 14,000 crore. So this concern suggests that people should have safe money, people should also invest in pensions, people should also invest in the insurance sector. It is in that context that it might have been told. Thank you.
Question starts with India is the most expensive market. No amount of hand waving can justify valuations. Guru Aswath Damodar, who is considered as the valuation guru of the stock markets, he said that the India valuation is so expensive and rupee is depreciated 13% in a year, and Nifty can give returns 8% in a year, but in last 6 months Nifty has fallen 12.28% in last 5 trading sessions. We lose 24 lakh crores. It is half of our recent budget. So how can a new investor can see this, and how can an investor get a confidence to invest in the markets?
There were talks about absolutely a burst coming in. Nobody believed that, and the burst happened. When things are overpriced, this happens. This is a cycle. In an answer to the previous questioner, I already mentioned that we need to know that prices can go up, prices can go down. And if all of you know, the financial market is not that extensive or thick, it is a thin market. She talked about penny stocks. So there are risks and gains. Here what we are discussing is about getting totally financially educated before you invest, which includes knowing that prices can fall. And that realization is not there anywhere. Nobody stands up and says, in my 40 years of handling finance in some form or the other, I was a banker also, only when wrong things happen in the sector, people highlight. Nobody gets up to say, sir, we तो बहुत बढ़ गया सेंसेक्स, thank you very much. कोई नहीं बोलेगा, हम भी नहीं बोलेंगे, तनख्वाह जब बढ़ता है कोई थोड़ी बोलता है, थोड़ा घट जाता है, इन्फ्लेशन ज़्यादा हो जाता है, सब सारे रास्ते में आ जाते हैं. It's very natural to be concerned. But over a period of time, like I have invested some amount from the day that the prices are falling. I'm not worried. In my longer term horizon, I know it's only 15 days or 15 months even. My horizon is 3 to 5 years. Even the research studies, I think Tirthankar will tell me, the average rate of return is 15 to 16%. Only people, some people, I won't say like you, but like many of us think that prices can overnight be 10% more. Why do I keep the money in the bank or even invest in the real estate which gives me only 15-20%? I will get 100% per annum. It is that thinking that gets frustrated when you invest at a wrong time. And how many of us do proper research before investing? How many of you here in this place understood the importance of this discussion today? I was expecting a house full. This is what happens. You undervalue, underrate, underestimate research, study, gaining knowledge, and the need for being on top of things. Even today, I do not claim to have known everything that has happened till today. New type of scams would be coming today. I need to protect my own money. I am not foolproof. Reserve Bank officials, Finance Ministry officials, anybody can be duped who understands the names. It's the new way, and I always say that thieves move ahead of police all the time. So it is the speed. During my time, we set up CERT-FIN. If you have heard about CERT-IN, this is Computer Emergency Response Team under the IT Act of this country, where all the cyber threats and alarms are being told to all the institutions. They know where from it is coming, they will tell you how it will be protected, and there is an organization also called NCIIPC, which is National Critical Infrastructure needs to be protected. I think NSE computers are one of those financial sector computers which needs to be protected at any cost. So there is an agency to protect them. How many of us know that we are protected by these many ways? Problems are much more than we see. Similarly, prices coming down, thousands of reasons are there. Prices going up, thousands of reasons are there. And over a longer term, if I see, it will come up. It is coming up gradually. That will be my answer. If there is anything more to supplement, Tirthankar?
About 12%. I think that should tell you. Nothing goes straight up. Last 20-year CAGR is 12%. And did you ever hear Mr. Damodaran's prediction going right?
Sir, I have a
We
very
all love him as a teacher.
particular question for you only, sir. As we seen in recent budget of taxes, even though we are earning profits or not earning profits, as for any such encouragement is going to hear from NSE or SEBI.
What?
There is no tax until 12 lakhs. Like that, when a trader executes a trade, even though he ends or he don't ends, he used to pay 6 types of taxes: STT, security transaction tax, SEBI turnover tax, and NPT, investors protection tax 18%, IGST. Like that, with some margin, we are getting any tax relief.
Discussion takes place. There are various industry associations, they come to us. I was in Finance Ministry, imagine, from Lehman Brothers, 2007. I don't know when you were born, but for long I have been involved directly. So whenever you talk of developing a particular sector, tax exemption comes first. People do not realize that the moment you exempt from tax, you have that much less resources for the country. Here I am assuming, like economics students, other things remaining constant. In a sense, I am not talking about corruption, leakage, or so many other reasons the money is not being used fruitfully. It is a resource that gets less if you exempt. So there was even a discussion which culminated into this modern income tax system, where all those exemptions, etc., things are not there. It's a direct calculation. So the world is moving, India is also moving towards a very simpler form of tax without any exemption to any sector. But having said that, I must tell you, I was handling reduction of STT in some budgets also we have reduced. Still our transaction costs are high. I admit that. We need not do it for you, we need to do it for increasing the financial sector as such in India, because now we are setting up international financial sectors. Gujarat Gift City is only one. I wish we have more international centers where we have a better tax regime and a competitive tax regime as compared with Singapore and others where the resources are moving out. So for that reason, we need to reduce the transaction business of this sector.
Thank you, sir.
Thank you. No more questions I would encourage, and thank you all very much for those who are present.
Thank you all. As we draw this workshop to a close, I would request Mr.
On investor education, not a one-stop effort. Synergy and digitalization is the need of the hour. I would extend my heartfelt gratitude to all those who contributed towards making this event a grand success. This workshop is the brainchild of Dr. C.S. Mohapatra, the ITF chair at NCATR, and his vision, dedication has brought us together for this important discussion. His unwavering support towards investor education and financial literacy has been instrumental in shaping today's agenda. My deepest gratitude to Lieutenant Colonel Aditya Sinha, GM of IPFA. His invaluable insights and his continuous encouragement has been, we really thank him for that. I sincerely thank Professor S. Zarar, Director of ICBM School of Business Excellence, Hyderabad, for graciously hosting us at this esteemed institution. Your support and the support of the faculty members in organizing this event has been duly commendable. I would also acknowledge the significant Ms. Deepanita Ghosh, Research Analyst at IPF, for her pivotal role in shaping today's discussion and also ensuring the depth and relevance of the discussions. A big thank you to all our esteemed speakers and panelists and their expertise, for their expertise in providing us the invaluable insights. Professor B.J. Rao, Vice Chancellor, University of Hyderabad, Dr. Tirthankar Patnaik, Chief Economist, NSE, Dr. Mamta Suri, former Executive Director IRDAI and former Executive Director IBPI, Professor Debashish Acharya, Professor School of Economics, University of Hyderabad, Dr. Satish Kumar, Professor Finance and Accounting, IBS Hyderabad, ICFAI Foundation for Higher Education. Your perspectives and thought-provoking discussions have really deepened our understanding about the financial markets, especially in the current scheme of things where technology is kind of all-pervasive, and we need to ensure that we are safeguarding ourselves against all the financial and the cyber crimes that are happening currently in the market. Secondly, lastly, I would also like to thank all the participants here. Your engagement, your questions, your participation has been really wonderful and impactful. So this event stands as a testament to a strong collaboration between NCAER and NSE, and we truly hope that this partnership continues to foster and we continue to get more such programs and cover more audience and the students towards financial literacy. Investor education is not a one-time effort. This is a continuous journey, and the financial landscapes also evolve. So our awareness and preparedness is very, very crucial. I encourage each of you to take today's session, today's insights forward and apply them in your financial journey. Once again, thank you all. Thank you so much.
On behalf of this institute to allow this to happen, and I expect more and more such collaborations with NCAER and IEPFA to happen, all the speakers. And mostly I would like to end the thanks with a high note, who brought so much of laughter to this group. Mr. Ranga Reddy, thank you very much.